Welcome to Motley Fool Money. Thanks for being here. I'm your host, Chris Hill. Joining me in studio this week from Motley Fool income investor James Early and from $1 Million Portfolio, Charlie Travers and Ron Gross. Good to see you guys.
How you doing, Chris?
It is Earnings Palooza. We've got the latest results from Google, McDonald's, Intel, and more. We've got Coke and Pepsi both hitting new all-time highs. And as always, we've got a few stocks on our radar. But before we get into all of that, it was a crazy week for reasons that had nothing to do with the stock market, and I'm referring, of course, to the tragic bombing at the Boston Marathon and the ensuing manhunt for those who committed the crime. This is personal for us because we have family and friends in Boston, but also because two of our colleagues, Seth Jason and Matt Koppenheffer, both of whom have appeared on this show, they ran the Boston Marathon this year, and they were in a hotel at the finish line when the bombs went off. Fortunately, they are okay. But just wanted to express that our hearts go out to the victims, their loved ones, and also the fact that we salute the many, many heroes this week, from the first responders, police, firefighters, EMTs, to the people who helped the authorities with tips and photographs, or just by being patient and doing as they were asked when the entire Boston area went into lockdown. This is a story that obviously continues to unfold, but Boston is stronger than ever, so hang in there, people. With that, let us get back to the business of talking about business, and we will start with big tech. Shares of Microsoft up on Friday after third quarter earnings came in higher than expected. And Charlie, a lot of numbers to chew on. I'll just choose the big one. Revenue of $20.5 billion, which tells me that Windows is still very much alive.
Yes, it is, Chris. It's another record-setting quarter for Microsoft as far as revenue and earnings per share. The earnings were up 20%. That might surprise a lot of people considering the data we saw out of IDC earlier this month, which said PC sales were in a complete collapse with Dell and HP and the like not doing very well. So how did Microsoft pull this off is the real question here. They saw a lot of commercial sales of Windows into the enterprise units. So while their retail sales through retailers like Best Buy were not doing that hot, they're upgrading a lot of enterprises off of Windows XP still, believe it or not, and onto Windows 7. And then their server and tools and Office divisions both showed double-digit growth. And you take it all together, it's a pretty good quarter for Microsoft despite the fears we had going in.
And Ron, you've made this point for a while now. Anytime I've sort of taken shots at Microsoft, you push back like, hey, they turn out a lot of cash.
They turn out a lot of cash. As Charlie knows, we have a large position in $1 Million Portfolio, and the thesis really is that it was not priced for much, if any, growth. It's really a value investment. And as Charlie just pointed out, they are growing. There were some accounting things that made growth seem a little bit more robust than they actually were. But even if you strip those out, nice growth, stock very cheap, still at current levels, and the company continues to produce oodles of cash flow.
It has been cheap for a while, though. What is your time frame?
I am a value investor, James. We are patient.
The last couple of times we talked about Google's earnings, mobile was kind of a struggle, but first quarter profits for Google came in just under $4 billion. So it seems like mobile is maybe less of a struggle now?
Yeah, okay. So the whole story with Google of late has been as they move to mobile, volume has increased because the amount of transactions over mobile is large, but prices have come down because it's not as profitable. At the ad business over mobile. But what we saw this quarter is those price decreases seem to be moderating. It was a much lower decrease than in previous quarters. And in fact, there's some evidence to indicate that perhaps they will be increasing in the future. So that is huge for Google. It's really turning the story around, and that will flow to the bottom line in pretty significant ways.
At what point do some of the other enterprises that we hear about, because Google is one of those companies that gets almost an outsized amount of attention for what are largely ancillary projects, Google Glass, the driverless car, that sort of thing. Their bread and butter is very much search and advertising, that sort of thing. As an investor who is looking at Google, do you expect at some point that one of those side projects is going to pay off in a significant way, or are you just focused all on the search and advertising?
We focus mostly on what's producing cash flow now, but we do give them a lot of credit for things that we can't even envision 5 or 10 years from now. And we don't do that for all companies. We do that for companies that we think have visionary leaders and are innovative. And whether Google Glass hits or there's something else, they have a lot of irons in the fire. They're doing a lot of different things. We do give them credit for things that will happen down the road.
It's like a soft advertising too that kind of builds the persona of Google.
Yeah,
Yeah.
sure.
Intel's first quarter profit of $2 billion, much lower than last year's first quarter profit of $2.7 billion. James, overall revenue down 2%, but they are not changing their guidance, which makes me think that they are betting on a pretty strong second half of the year.
Yeah, and the stock rose, Chris. You know it's bad when your earnings drop 25% and your stock goes up. It's like going to a party and hearing everybody say, "Wow, I really don't mind your breath tonight." I mean, it's just it's just a statement
It's
in
a
a way.
pleasant surprise.
PC sales did drop 14% last quarter, which is probably more than people expected. Intel struggled a little bit with mobile. That's been the ongoing struggle. The thing is they've got a new CEO coming in about a month, so we'll see what goes on after that.
Do you think that, first of all, they haven't named who the new CEO is going to be?
That's correct, yeah.
Whoever this person is, they're coming in mid-May. What do they need? Because the guy who's leaving has been at the company for nearly 40 years, and I'm just wondering, is it a situation where they absolutely have to promote someone from within? The fact that they haven't named someone makes me, and I don't watch the company that closely, but the fact that they haven't named someone makes me think that they're going to be looking outside the company.
It kind of seems that way, Chris. I would agree with you. I mean, nobody knows. We'll have to see. Whoever it is has got to really focus on mobile. Intel is spending a lot there. They've obviously got plenty of money. They've got strong relationships, but they just have yet to execute.
The stock, as you mentioned, up this week, but over the last year, losing to the market. Do you like it at the range it's in right now?
I think there's upside. I think there's more risk than I was appreciating, let's say, 6 months or a year ago.
Before we move off of technology, Microsoft, Google, Intel, the combined market cap of these three companies is over $500 billion. And I'm just wondering, as investors, is that something that gives you pause? Because there are certainly people out there who look at technology companies and they are interested in investing in them up to a point. It's not a situation like a Coca-Cola or an ExxonMobil where there is essentially no such thing as too big. There are people who look at technology companies and say, there comes a point when they get to be too big to the point where I no longer am interested in them. What's your view?
Oh, that's fine for them. I think as long as the earnings of the business can support the market cap, I'm not bothered by it at all.
Ron?
But I think you also have to be realistic. So, can a company triple or quadruple? And what would that mean? Would that be a multi-trillion-dollar company? And is that realistic? Is the market potential available to it for it to actually grow to that size? So you do have to think that through.
James, do you focus on stuff like this, or is it just all about the dividend for you?
Well, it is always obvious all about the dividend, but tech is no longer tech. It's no longer just tech, and tech is a big, diversified ecosystem. So we are in a gradual period of reframing expectations. You don't have to grow 20% every year to be a tech company. You can be a dividend payer, and it's okay. It's just okay. People like Ron and I and Charlie will still like you.
Let's move over to food. Chipotle's first quarter profits up 22%, shares up more than 9% on Friday. Ron, profits are looking good, but the same-store sales starting to slow down a little bit.
Yeah, that is part of the story. Only 1% increase this quarter, but they continue to open up stores at a nice clip. What's interesting here is that the increases in raw materials, food prices, had been going up. We see them moderating here, and the company has indicated that they may actually raise prices later this year, which they may not need to do. They've had to do that in the past to keep up pace with rising food prices. Now, if they don't need to do it, but they do it anyway, that will fall right to higher margins, fall to the bottom line, and we'll see increased profitability.
Shares of McDonald's down after global sales dropped in the first quarter. James, what do you think?
Chris, McDonald's sales are inversely correlated with my hopes for humanity. So anyway, this is good. Technically, revenue income were up slightly, but comparable store sales fell. The company says it's soft consumers, but that didn't stop McDonald's from posting pretty good results during the past recession.
Yep.
So I'm thinking it's maybe a combination of two things. One, consumers actually changing their preferences to realizing McDonald's does not serve real food and instead going to places like Chipotle, which on balance have done pretty well. The second thing it could be is McDonald's, Wendy's, those guys fighting over these dollar meals, and that's going to hurt margins.
Shares of McDonald's last week hit an all-time high. Is part of what's going on here just sort of a natural pullback from that? And if so, what do you think of the stock valuation?
I'm not a crazy buyer at these prices. I think it's done so well over the past, let's say, 5 years that we're kind of adjusting our expectations. Everyone is.
First quarter profits for Johnson & Johnson came in higher than expected. The consumer sales division, which produces Tylenol, Motrin, Listerine, etc., $3.7 billion. James, this stock is up more than 30% in the last year. What is going on?
It's great. Johnson & Johnson has learned a lot over the past few years, Chris. They've learned if you put metal shavings and pieces of formaldehyde-soaked shipping pallets in your products, your sales go down. And if you remove those things, your sales go back up. So that's simple math. That's part of it. They've also got some acquisitions helping too. It's really it's a good company. It's got a lot of obvious headwinds, tailwinds, baby boomers and such. So they're just not screwing up. And these recalled products are coming back onto the market, and it's just getting better. It's reverting, basically.
I think this is the second quarter in a row where they didn't have any kind of recall or significant snafu. If they keep this up, aren't people just going to expect it all the time?
It's crazy, isn't it? Yeah.
Coming up, the battle for the living room just got a little more interesting. Stay right here. You're listening to Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in studio with James Early, Charlie Travers, and Ron Gross. Before we get back to earnings palooza, shares of Sprint hit a 4-year high this week after Dish Network made a bid to buy Sprint for $25.5 billion cash and stock. Charlie, they are swinging for the fences over at Dish.
Yeah, you got to be loving this if you're a Sprint shareholder. There's a bidding war going on. There is already an offer on the table from Japan SoftBank, which owns the third largest wireless carrier in Japan. They wanted to buy 70% of Sprint to get into the U.S. market. Dish said, hold on, not so fast, put in a 13% higher offer. And what Dish wants to do, their core business is satellite TV and broadband, and they want to get Sprint's wireless spectrum so that they can bundle packages with phone, internet, and TV and make it a truly mobile offering where consumers can use video on their tablet outside the home as well as within. So the stock, interestingly, is trading higher than Dish's offer, says the market's expecting a higher bid to come through, possibly from SoftBank upping its previous offer.
And Dish shares up this week as well. So clearly there are people out there who are looking at this and thinking, boy, if they can pull this off, this is going to be great for them in the long run. Even though, as you and I were talking about earlier, Dish is a $17 billion company making a $25.5 billion bid. Is this something where you're at all interested in the stock, or is this one of those situations where you kind of want to sit on the sidelines and wait to see how it all plays out?
So I think over time, Dish's CEO, Charlie Ergen, has proven to be an exceptionally shrewd businessman, and I think the package of his current offerings with what Sprint has makes a lot of sense.
Shares of Coca-Cola and Pepsi both hitting new all-time highs this week after their latest earnings results. And James, I think we've seen this movie before, the basic theme of strong international growth, declining soda sales here in the U.S.
That's been the trend, and Coke's volume was up, whereas Pepsi's volume was down a bit. But whatever, the market has decided that any news is good news for these companies. So they're big highs. I like them both. They're both IRX. I think they're around 20 to 30% overvalued right now. In each case, the weird kind of funny backstory with Coke is they've had this on-again, off-again relationship with their bottlers.
Right.
They own them. They spun them off. They bought the biggest bottler back in 2010, and now they're saying again, well, maybe we need to go back to more of an outsourced distribution. They're giving the existing bottlers kind of some more rights. So it's just kind of weird. They clearly can't make up their mind, which I find funny.
I was going to say earlier in the week, Coca-Cola shares, I think, were up about 5%, which, given the size of that company, I can't remember the stock moving that much in either direction ever.
Yeah.
When you look at the international growth, it seems like Coca-Cola may, at least in the latest quarter, have a little bit of an edge just because of where they are expanding. When you look at Brazil and Russia and India, is that how you see it as well, or is this just sort of like a one-quarter thing?
Yeah, I think so, right? Coke clearly has the momentum. Pepsi, up until now, has had a lot of momentum. They had some
particularly
some
in
problems.
India, right?
Yeah, and they're turning around, but I think that's kind of hitting the point of diminishing returns. But I think long term, these are both great companies. The issue is just right now with bond rates, with CD rates low. I think we've got a lot of money piling into these stocks saying, I just want these steady dividends, and that's what's driven the prices up.
Intuitive Surgical's first quarter profit rose 32%. They had double-digit sales growth. So, Ron, why are shares down this week?
Oh, Chris. It's a funny thing. It's because they didn't raise forecasts, which they're notorious for doing.
So guidance trumps results once again.
Exactly. Now, this has been an incredible success story. They're really kind of innovating the way surgery is done. There's a lot of negative press lately. There's a bunch of lawsuits from people claiming they were harmed during surgical procedures. So that's certainly a negative for the stock. And then add on to that the fact that they didn't raise forecasts, which investors want to see for a growth story like this, have the shares selling off.
Would you trust a robot to perform a surgical procedure on you? And if so, what would be the most aggressive procedure?
I believe I would. One of those kind of non-invasive, that's what they're for. I certainly would want the surgeon to be skilled with the robot, which is actually something we're seeing. We're seeing there is a learning curve here. So I would, I don't know. They'd have to have done at least 100, 200. How many for you? A few hundred?
I would negotiate for a discount. I mean, someone's got to go first, right? I mean, that person can get a little cheaper.
Surgeries aside, Charlie, this FDA investigation, how big a red flag is that for Intuitive Surgical?
I think when investors see the phrase FDA probe, they get spooked. But you have to remember that.
Sounds good, doesn't it?
Right. Hundreds of thousands of Da Vinci surgeries are performed every year. So when you have a few hundred complications, I don't really view that as too big a deal.
And finally, if you ever wanted to invest in Shamu the killer whale, now's your chance. SeaWorld Entertainment went public on Friday. The IPO was priced at $27. Shares up big the opening day. Who doesn't love Shamu the killer whale? But it did have us thinking, Ron, about sea creatures in general. And let's face it, not as is the case with stocks, not all sea creatures are rated properly. Do you have any underrated or overrated sea creatures out there?
Absolutely underrated is the blobfish, and I implore our listeners to Google the blobfish, which looks exactly like Ziggy. And perhaps it was the impetus for the Ziggy character. I can't say for sure, but it's hysterical.
James, what about you?
I actually saw Ron's blobfish when I was doing my hours of research for this show. It is worth Googling. I will. Underrated without a doubt, plankton, Chris, especially the zooplankton. These are tiny, thankless little creatures that live on the surface of the ocean and basically eat stuff and dissolve them down to the ocean, making the ocean the world's largest carbon sink. Trees get all the credit, but without zooplankton, we're toast.
Wow,
Trees
you're right.
get all the credit.
Trees
Chris.
do get a lot
do.
of credit. And I'm not anti-tree, but that statement is true. Charlie?
I'm also going underrated with the sea cucumber. It is a creature without a brain, and yet it has this innate instinct when it's under threat to puke its guts out at the attacker in this sticky poisonous mess, so it can then get
It's like
away.
my college roommate.
Let's bring in our man Steve from the other side of the glass. Steve, underrated sea creatures out there? Overrated?
I'm going underrated for angelfish, which are just beautiful. They do look like angels.
He's so sweet.
So tasty.
That's a nice thought. I'm going Aquaman.
Wow.
Aquaman.
Out of the box.
I thought you were going to say Loch Ness Monster.
I had that down.
Aquaman, I mean, and Ron, who is sporting his Superman cufflinks
Happy
today.
75th birthday, Superman.
Happy 75th to the Man of Steel. I mean, I think you can appreciate that Aquaman just never gets the credit that the other members of the Justice League get.
That's true.
I think that's fair.
And when you consider just how much ocean there is out there, I mean, come on, he's the king of the sea. Just
Absolutely.
cut Aquaman some slack. All right. Ron Gross, James Early, Charlie Travers. Guys, we'll see you later in the show. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. I'm Chris Hill. Joining me in studio once again, Ron Gross, James Early, and Charlie Travers. Time once again for the stocks on our radar. We'll bring in our man Steve to hit you with a question, but Ron Gross, you're up first. What do you got?
Going for a little company you may have heard of called Apple.
Apple.
AAPL. They report on Tuesday, and I'm really interested to hear what they have to say. I know there are challenges here. I know competition is increasing. At 9 times earnings, the company is just too cheap. You strip out the cash, 5 or 6 times earnings. Despite the risks, despite the challenges, the company is a strong buy here.
Steve?
Do you think when a company gets their share price gets to the $400, $500, $600 level, I know it's under 400 now, that inherently investors are just scared by a stock that feels that expensive?
I think there actually is something to that. Lower price stocks, I think, are typically more liquid. In a case like Apple, though, you can't really get much more liquid than Apple. It's obviously traded in volumes that are astronomical. But I do think there's something to that. I think if this company decides to do something with their cash, increases their dividend, you'll see many good things happen in terms of who owns the stock, the value people move in, the dividend people like James will move in, and I think we'll see some nice appreciation.
James, your stock?
Speaking of dividend people, I'm going with Wisconsin Energy, Chris. The ticker is WEC, about 3.6, 3.7% dividend. This provides electricity in Wisconsin. It is hard to get excited about an electric utility, so I'm just going to fake it. Basically, this company had underinvested in infrastructure for a long time, and in 2003, a new CEO named Gail Klappa came in and put in money into infrastructure and got a great deal with regulators to sort of get repaid, and stock is up 300%. It keeps jacking up its dividend every year since 2003. The only downside, this guy pays himself a boatload, but I think he's worth it.
Steve?
There's something about Wisconsin that makes for good energy.
The favorable regulatory relations, Steve. It's really critical that a utility have good relations with its regulators because they're the ones who set the return. So that's going for them there.
A lot of cheese, too. Charlie, we got less than a minute.
I'm going with Coach, ticker COH, fashion retailer, well-known business. They also report on Tuesday the stock has been crushed over the last year over fears that competitors like Michael Kors are going to start taking their market share. I think that's a bunch of nonsense. Coach is doing great in Asia and has a lot of opportunities in Europe and Latin America for long-term growth.
Steve?
Do you have a Coach wallet?
No, but I would actually own one. So hint, hint, gift.
I have one.
Apple, Coach, Wisconsin Energy?
I'm an Apple shareholder, so I got to go with Apple.
Yeah.
That'll do it. Ron Gross, James Early, Charlie Travers, guys, thanks for being here.
Thank you, Chris.
That's going to do it for this edition of Motley Fool Money. Our engineer is Steve Broido. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you next week.